Hey guys, good morning and welcome. So it's about midday here in the East Coast. Anyways, it's midday. Here it's about 11 a.m. and I have been following the trend in the triple Qs all morning. And I'm here to tell you, this is one of those days. The trend is your friend. I had a couple people send texts and emails and stuff wanting to know, what about this low band? Should we be catching the bounce and playing both directions? And I said, I just prefer to stay with, what's on the screen in front of me and what I see happening. And I want to show you why that played out over the course of the morning and why sort of staying with things was the better route to take, even though it was difficult at times because it looked like something very obvious was happening right in front of us. Let's take a look at the charts. So here you see it. This is the triple Q this morning, right? So we're down again, pretty hard. And we've had a fib retracement on this morning's price action. And you can see that that retracement made for a nice short side entry, and that got you down into this VWAP. And that VWAP was the logical place to go and look for a profit objective. It's tempting, of course, to try to catch the move back all the way to the downside. That move did, in fact, happen eventually here. So that was, if you split the order up or if you did something to, try to capitalize on two legs of what was going on, then that's a good thing too. But generally speaking, I think the thing that I want to point out today was a lot of people are always, asking me why I don't do this kind of a thing, right? And try to capitalize on these inflections in both directions as they happen. Why am I always Dave Landry used to call it a trend-following moron? Why are you following the bigger picture move? And he always said, well, because that's the one that winds up paying off in the end, and the rest of them wind up being a disaster if they go against you. So today wasn't such a disaster, but let's say that you would have decided that, this move down to the pivot here was good for this move up to there. This move down to the pivot was good up to here. And then you went and tried to grab this move down to the pivot. So first off, third time to the well is usually not a good idea, right? Don't go back to the well too many times. That's an old adage and certainly true in trading as much as anywhere else. But if you look at what happened here, right, this break down below, even though it was only, 65 cents on the triple Qs, that wound up handing you a small stop out on the Qs, but on the NQ, that was a couple $1,000, right? So if you're trading, if you're trading any kind of lot size on that, once you get into 3 and 4 contracts, it starts to add up pretty quick. And when it goes and breaks down like this, it tends to happen fast. So this breakdown through this pivot line didn't hesitate at all. It shot straight down to here. And if that happened to you, then right, you're starting to try to put the pieces together and figure out, hey, why the heck did this just go south when the whole morning it's been bouncing nicely. So there's a couple things you need to look at, and that falls into this realm of confluence. And when I talk about confluence, I'm always saying, we want to look at where is the volume by price, what are the 2 standard deviation channels doing. Remember, 2 standard deviations just says, but once you get away from this middle line here, if you get up and touch the top line, you've got a 95% probability you're going to make a move back toward the middle line. And if you touch the bottom line, you've got a 95% probability again that you're going to make a move back toward the middle line. But it doesn't say when, and it doesn't say how quickly, and it's not a guarantee. It's a 95% probability. It's on a probability distribution. So you always want to make sure that when you're looking at this kind of stuff, right, that you keep in mind where's the session VWAP, where are the anchored VWAPs, where are these bands, and are they tracking parallel or are they starting to widen? When they start to widen, it spells trouble if all the other things that you're looking at don't line up. So if you don't have a volume by price level that indicates you're going to get an inflection, which we didn't when this move happened, if you don't have an anchored VWAP somewhere that says this is going to be support, which we don't, right? All we have is the S2 pivot. And, if you don't have natural support and resistance that lines up, then, you've got another big problem. But, in this case, we did have 354.73. So 4.73 was the support line down there. So that was working in your favor, but the rest of it was definitely working against you, right? The rest of it was not giving you confluence, and confluence is the thing that's going to help you get on the right side of trades more often than not. So that's it. I mean, that's just a little lesson today, right? If you shorted this from this 6.13 level, right, then you are happy. If you if you went long from this pivot line here, then most likely you are not so happy. But keep an eye on it. Just keep an eye on the market and do what the market's telling you to do. And if you get impatient or if you get greedy, get up, make yourself a cup of coffee, and just walk away from this stuff for a little while. And, trust me, I took the dog for a walk this morning because I just wanted to go and avoid getting caught in something that wasn't going to work out. And it turns out that was probably the better thing to do with my time as well. So focus on the short side. Look for these retracements up into, up into these levels. And we're going to look to get short if we get up into here, or if I get up into here, or if it gets up into here. I'm going to look at the short side of the market again, as long as things don't break up above this high on the open, then my predisposition is going to be to stay on the short side of the market. All right, so that wraps up my strategy here. And I think that, if you have any questions, just shoot me an email, adrian@traderinsight.com. Go ahead and sign up for the live streams. If you're a Trader Insight person and you want to get the live streams every day, remember you can just go and click on the link that you get in the email that gives you these videos, and then you can just join us live as we do them. All right, and that makes them a little bit more salient to what you're trying to do over the course of the session. Okay, great. Have a good day, and I will see everybody tomorrow.